So this morning we came in, we spoke about day 2 trend setting up, the potential, we said to trade out that ledge from yesterday, but wary because of the positioning being negative delta, that there may not be the kind of stops that you would sometimes expect through those kind of references. That then quickly turned into a risk-off move. The yen bottom started to go bid, and suddenly the context of the day changed very fast, and then it became a market positioning unwind. So we had our negative delta yesterday. Now you've got your risk-off, so now you have to be, you're looking for that kind of unwind of a lot of yesterday's move, and potentially looking to play the risk-off short equities, long bonds. So we'll get looking at the profiles first, and then I've got a video we can talk more about the actual price ladder execution. But what I think was a nice setup, and it's something I've seen on especially stocks or in any market, it's a setup, and that's when you've kind of you've got a very sort of high volume area that's been traded out, very effectively. It's been auctioned. The market spent a lot of time there. We opened up, and immediately when the yen started to turn, the equities started to look a bit weak. The SPOO broke a really critical pivot that I'd been watching for a few days, and knowing that when it broke, I would probably want to be short. So I think, taking this morning when things started to turn, you could still get in once the yen started going. The bonds, there was still opportunity in the euro stocks, to get in around this level, and very tight risk on this kind of trade. You don't really want to see the market, coming back above the open, and what you often see in this trade is the market will knife through that high volume area, and that's exactly what happened, and it gave you that move. Gave you a very fast move right down to take out the week's low, and then it also, like an hour later, it took out the previous week's low. So it broke the one time framing and that we've been doing. Also, we had a rising wedge formation in all the equity markets that was false broken yesterday through the top, and the market came back in and closed inside there. So I think there were a few signals pointing to potentially a profit take in the equities. And obviously with the yen bid, we got that nice risk-off move across the board. Bunds, we spoke about this, that we opened here, we actually went bid. It looked a bit weak initially, couldn't really bid, couldn't close the gap, and then the market started to trade down. But if you notice that price action this morning, you didn't get that flurry of a washout of positions. That's because we had an negative 11,000 delta on that day. There just wasn't the positioning, the buy side positioning in this part of the profile. I think if there had been that, it's a great trade, and you would expect a really good splash out, and then it's about monitoring for continuation. If you start to get new selling after the stops have been taken, or if it dries up very fast, you get that really good move back into range. So those are the plays we spoke about a bit this morning. Came down, market was quite lackluster down here. There wasn't any sort of serious new selling coming in the futures session, and then the fact that cash opened all the way back in range, and then immediately when that yen started to turn, you started to get your signals that this market wanted to go up. Now, this was the base. Yesterday we had the break of the move started here at 55s. And it's always important, if you have a footprint chart, to go back and look at the previous day and note where the big positioning came in and where the move actually started. Because today, if you were alert to it, it literally ticked the 55s, or upticked the 56s, and then went straight off, and there's a really good price response from there. So just something to keep an eye on with regards to that. So I'm just going to go across now. We've got there were this morning for me, there were two very good trade opportunities in the Bund. The one was realizing that that the risk off was coming in, seeing the weakness in the equities in the SPU, looking at the yen and leaning on that. So I think, obviously for me the most when you could feel it starting to come through, the Bund was starting to trade around here between 26s to 29s, and it started to really accumulate in that zone as the yen was going bid and the equity started to roll over. So that gave you, that move. Whether you rode it to the top or not, it's a different story. I was quite worried about this 36s, 37s area on the profile, but it gave you, that flurry of activity and that panicky kind of unwind of positioning. And then, if you guys want, if you're on the ball, watching the rejection at yesterday's breakout point, literally touched that, and then starting to see that someone was accumulating on the offer here. And we'll look at the footprint charts, how you could actually see it in the footprint, and then getting probably positioning through here for this unwind of the risk off move. So those were the two that in the two trades, basically, catching a part of that move and a part of that move, I thought were the really good opportunities in the Bund today. And then obviously the equities also offered a nice move, as we saw on the profile. And so I'm just going to go over to this. So this is for the break up. So when the risk off was coming in, and what I was looking at on the footprint, and basically what I based my trade around, how I got my execution right. And that was this. So this area, you started to see the accumulation here. So just note, so each one of these is a rotation of prices. And if you can see here, in this rotation, and actually probably, just basically over 4 prices, the delta on that rotation went up to 2,000, almost 2,000. And you could see just over these 3 prices, someone was sat there absorbing. So that's a really good, when you start to see that, and especially with the risk off, you can lean on the yen, you can stay in that trade, you can really get your confidence from the other markets of the US bonds holding bid, the yen holding bid. So that was a really good place where I think you could take on risk here with a very tight stop. You don't want to see the market after it's put in this accumulation. You don't want to see the market kind of trading down, because obviously that positioning has the potential to unwind. So you maybe have a 2-3 tick stop, and you're looking now for the intent, the buyers to put the pressure on the sellers, and for that eventual stop out move. Now when you see these 8s, this 27s, 22s, very thin on the offer, that means people are panicking, people are just paying up, they're getting out. All the shorts, they're just hitting the bid immediately, so there's almost nothing trading, because the market's stopping out and going through. That's when you get those flurries. That's kind of what you want to see. And then, interestingly, how we came up and we bounced straight off the previous days where the break came in. So that was what I was looking at this morning. Well, another thing that's important is you've got your accumulation, and then you've got someone actually, sold. Someone sold more contracts here than was bought. And what's important about these is that you trap. This is like you're trapping positions in here, and then you want to see the market go bid, because that's an imbalance now. So when you start to do that, you get these imbalances in the footprint, and they can also be very handy. And you see how then on this rotation, the market just came back and then held on that imbalance, so to speak. So, people who getting short in here, people who got short in here, they're the ones who's stopping out in this area. So really good sometimes to see when you can see the buying intent, and then you get a price point that shows actually there's someone who's willing to sell here, and then it starts to go bid, and then you start to get guys stepping in here again, and taking the market bid. So that I thought was a really good footprint play where you could actually really get your risk tight and time that move very well. You do have to be patient. You know, these people want to accumulate before they have to start paying up. And that's something we spoke about on the last video. You know, when you do that, don't expect the market to just, you know, rip in a couple of seconds. It's about capturing some positions in here before we can get this move. And it's something I'm trying to improve all the time. So that was that. And then on the breakdown move, another really good footprint play, I thought, was, notice here, so you've got, this is another imbalance, you know, so people starting to buy in this area, but then look at the selling that came, look at the positioning that came in here. You've got negative 1,100 and negative 1,100 coming in here. So you've got a rotation of about, well, positioning in this area of about negative 2,200. And how you want to play on these is when the market goes offered through there. So that's kind of what you can get short in here passively. You know, definitely you can build a position nicely in here, but where you really want to see the energy pick up is when we start to, you know, break out of this accumulation zone or the selling zone. And that's what you saw. You got this this really nice move, and if you see here, there's no stop out here. You know, there's still people willing to buy, and there's not evident that people were paying down here. You know, what's quite evident is that we were still selling net. People were willing to sell on this rotation, and then slowly the market, you know, from about 36s and trading all the way down to I think it was 14s or wherever it was. But you've got a really good, you know, 12, 14 tick move. And you can do it over, you know, you can do it with size with a very tight risk. You know, you don't want to see the market once this had come and you've got your negative delta and you can see it quite clearly. You've trapped positions in here and here. You don't want to see the market going bid over here. So you can sell 36s with a stop above 40s, for example, 4 ticks, and you know you've got 12 to 16 ticks, which always makes you want to know what you can make, and that always made sense. So those were the two moves on the footprint and the two really good opportunities in the Bund where I thought you could have got good size on, and from an execution point of view, I thought I'd show that to you. So without delaying too much more, I'm going to just go straight over to the replay. And okay, so just as we were speaking, that was the footprint level. You know, from the 27s to the 29s, we were kind of looking at that. Someone was accumulating here. I don't really like to, I never really have positions across more than a few markets. I had a few today. I was short the S&Ps, I was short stocks, and I was long Bund. So it was a new kind of trading for me, having to watch 3 markets, and it's something I need to review now because my concentration wasn't in one place. So I do look back at the end of the day and I'm saying, you know, when I speak to you about how I should have been big at certain levels, it's about now trying to maximize why I couldn't have been, you know, 4 lots here, at least 3 or 4 lots here, and then, you know, managing that kind of trade and believing in myself, which was the most important. So as we said, I started to sell the stocks according to the profile just above that high volume area, which was 03s, and I wanted to see it break through that and knife very fast through to the sort of 90s area. And then a Bund, I was looking, we had that low volume area, so I was wary about how much it was going to go through the 37s, so just looking for, you know, to take an opportunistic move. And I'm just going to fast forward because I'm not sure how to speed this one up. And yeah, just coming in here, so that was the top of our high volume area, and we've broken it. That's a really good sign that we've broken, and now I want to see the market hold here. Bunds is starting to go, and if you look at, you've got the US Treasuries all on their highs. That's US Treasuries here, and you've got the whole, all the bond space is corresponding to that. I have my yen and my S&P on another window, so I'm also looking at that the whole time, making sure we're not getting a reversal in the risk. And that's sort of what will keep me into the trade. And as soon as I start to feel like we might be getting a risk reversal, then I'll start to look to take profits. So now we start to actually, we start to just auction this area out a bit. And the thing about the Bunds is the Bunds actually gave you a lot more time. The equities started to get quite weak quite quickly, dragged by the S&P. But the Bunds gave you a lot of time, especially at this 32s level, where you could have accumulated quite a big position into the risk-off move. Just fast forward now to about 20s. So the Bund did it. I mean, the Euro Stoxx has done its move, through to the other side of that high volume area. So I don't really trade Euro Stoxx much. I don't like the way it moves, normally, but today it actually had a really good flow to it and a good technical structure to it that you could have lent on. But notice, this was the area I was worried about, the 37s, that it might hold in the Bund. So I was cautious now at this stage about how much this move was really going to sustain itself. But looking back, you still had the yen really bid and the SPU very offered, and that's what should have kept you in this trade. So from my execution, I look back now and I know, it's not every day you get these broad-based risk-off moves, and when the SPU really offers in the Eurex session. But now, basically, when I look back, it's to not get out. You've still got US bonds on their highs. This is great opportunity to step in here and start to accumulate still, because of that, the 10 years and the 5 years still holding their bid really strongly, and the equities still remaining very weak. So, Bund's offering you really attractive prices down here again, and we haven't seen that flurry of unwind that we're kind of looking for in a day like today. And then I'm just going to take you to that unwind. So now you see stocks is starting to really, pick up tempo to the downside. You've got that current weekly low at 89s, I think. And I think I get out, but I want to just show it to you on the... So 20... And we just start to watch here. So this is we broke that weekly low. I think it was 89s, and now we're starting to see. You'll start to see the buyers stepping in here on the Bund, and you get that stop out move that we talked about, where you start to see the shorts paying up. So just watch for. I think it starts to come in here, and just watch how the guys are, he's been accumulating he started accumulating those 32s, and they're still being hit here, still getting hit into the bid, and then just holding the pressure on while the equities remain weak. And that's what when I look back on today, there's no reason to get out until these markets start to turn that you're leaning on. Stay in that trade, from where you've picked up in the footprint. There's no reason that I should have been out, and obviously you've got a few markets in place, so that's new, but there's no reason you should get out until things start to turn and tell you you're wrong. So basically you're looking for reasons to stay in the trade as opposed to getting out. And just pay attention now. You start to see that intent, buyers really sort of hitting market now, reloading on the bid, putting that pressure on, equity staying weak, and you kind of we're waiting for that flurry now, which will take us all the way up to the 55s. And then, while I'm speaking to you, just note the reaction at the 55s. how quickly it hits that area, hits the 56s and then gets offered straight away, which is really good rejection price action example that happened here. And it's not about having to be short up here, but just to note that it was rejected strongly off there, and then you can plan a trade once you start to feel that maybe the equities have bottomed out. So unfortunately, I took my Eurostoxx ladder off my screen. It doesn't really live there. This is my bond space. But yeah, now again, just the market is hardly rotating back. If you see it's like maybe 2 ticks, you're not getting big pullbacks, and that's what you want to see. If the market started to wash back 5-6 ticks, maybe you could start to think, this market's rolling over. But the fact that we're just getting reloading and bid over that, and also these little low volume nodes that get left, and then someone accumulates at a price, and then it just goes straight bid from there. Really good to position on, and take your little scalps. So now these are shorts that are starting to pay up here, and you can really feel the energy that came into the market, around this area, and you never would have, you didn't go through any pain. There was no big sort of washbacks in the market at all. Okay, so watch here. Final sort of flurry up into the 56s. So you can see 11 contracts hit the 56s. It went offered 54s, and now someone's stepping in, and you basically see 100 into their reload, and it's down. And you can see that intent there, just there. I'm not necessarily saying you want to get short at that point. In these kind of moves, the market can remain irrational or panicky for a lot longer than you can keep your risk. But it's a good piece of price action that you could have based your trade around when we started to come down into these 40s and on the footprint we spoke about.